A point that I always make is that, doing business with the U.S. with such a large market can also be complicated for a first-time exporter or for a company that may never have done business overseas before. That for meeting the demands that American companies likely have in terms of the supply, the volume of products that they're looking for, and so you run into issues like that as well. The U.S. Has very sort of strict, for agricultural products, the U.S. has very strict sanitary, phytosanitary, pests, all these sorts of regulations that are required to export, to get certified in terms of sending, fresh produce and fresh, things like, baby corn, which was an issue that went on with Zambia for a long time. So sometimes it's easier for a company, in Africa or Latin America to look at their, regional markets, or to look at, the Middle East or Europe before they, immediately jump into doing business with the U.S. So it's just something to consider, I think, especially when, for, exporting specific products. For the majority of the products that are undergo, the differential is really not that big. In some cases it might be 2% or 5%, and in some cases, the currency exchange rate or the transport costs or the volume, it winds up where it really doesn't, that tariff line doesn't really factor into making a big difference in the long run. So it's not to say it's impossible, but I think it's also something that, you just have to, it's a question of considering, all of the different factors that go into exporting, and the AGOA Act is just, I think, one very small part of that. The question of why American companies are looking at Africa, and I think that the question that you asked about, what the competition around the world is doing, and I think that's definitely something that American companies have seen and witnessed. I always bring up the point, it's not just China, but it's the Emiratis, it's the Turks, it's the Brazilians, it's the Moroccans that are really going into Africa. I think during the economic slowdown a few years ago, companies were really beginning to take a look at different markets around the world, and what are the sort of the markets that really people haven't arrived in in any noticeable way. And you could point to there were little stories all around the world. There were Burma was opening up. Mongolia was discovering natural resources, but Africa was really the big story there. So I think that's what's driven a lot of this, and I think it's been the growth of a number of countries on the continent. I think there's a statistic now, or last year, that 7 of the top 10 world's fastest growing economies are sub-Saharan African countries. They're just sort of things like that people began to start recognizing. I think with agriculture, as with a lot of goods, and it sort of goes to the point that I made earlier, that there are going to be a very set of strict guidelines, not just with the production of agricultural products, but all sorts of different factors, labor, environmental, that are a part of the equation. Again, especially on fresh produce, I've always thought, and I'm not an expert in agriculture, that dried fruit was something that African countries should explore more. Number one, because you don't hit it's a high value product. Number one. Number two, it's not perishable, so you don't hit the sanitary regulations. And then third, it's easier to, it's cheaper to ship dried products, but that's another point. But I think that there's, and it just goes to the point of about the U.S. market and understanding the factors that go into it, and it's something, a lot of work has gone into this over the last several years. The U.S. Agency for International Development has supported a lot of these products or these initiatives to help on the agriculture sector, but it's definitely the agriculture sector. It's another level of things to become acclimated with. The answer to that is probably no. And I think that there's if you look around the world at the examples of where capital has flown or migrated to over the last 50 years, I mean, I think it's the countries that have been as receptive and open to business and have implemented as limited a number of regulations as possible. As we've been talking about, it's hard enough to get give an American company to come and look at a market, and I think when you factor in those sorts of things, it makes things that much more complicated. You want to make things easier for not just Americans, but for any foreign investor.
Zimbabwe is actually Africa's best kept secret, simply because the richest investment that Zimbabwe has is a skilled population, one that's educated, hardworking, generally honest, and desiring success. And so from that perspective, before we even start talking about Zimbabwe's vast mineral wealth, we got to talk about its people. And so from that perspective, we are friendly, we are welcoming, we are accommodating, and we would love to negotiate with foreign investors so that they come here. We've gone through a very torrid time. It's been almost 2 decades that we haven't been integrated into the global economy. And as a result, it's truly a last frontier economy. It has significant infrastructure which needs rehabilitation, and of course additional infrastructure is required. So from an investor's perspective, that infrastructure is beckoning. Then of course, we've got to turn to the most popular investment destination for Zimbabwe at present. 70% of all investment that's coming to Zimbabwe, certainly since dollarization, has been the mining sector. We have no less than 50 minerals, and the most notable, of course, are diamonds, platinum, gold. And we feature as a country having amongst the top resources in terms of concentration, particularly the platinum group metals that we have on the Grand Dike, and so a great dike. And so from that perspective, mineral investment is what we are looking for. There is, of course, the issue of ownership that has dogged the media, and people need to understand and appreciate that the extractive industries is where this law will be applied more rigorously, although it remains still flexible and negotiable depending on the investment quantities, levels, and the time to actually obtain a return on investment for foreign investors. What we would like to see are joint ventures between our local people and foreign investors. And if we're able to strike a relationship, which by the way remain very negotiable, all within the context of the Indigenization Act, I think we've got a good thing coming. Then of course one turns to our agricultural sector. Zimbabwe historically was known as the breadbasket of Africa. We have good fertile soils, we've got land which we can irrigate, for sustainable production in terms of agriculture. And so from that perspective, we would like to redevelop the status that we once had as the breadbasket of Africa. Our exploits in terms of tobacco, cotton are well documented, and we are quite a dominant exporter. But if one looks at the projections to 2050 in terms of food requirements for the whole world, and specifically for the African continent, Zimbabwe offers a lot in terms of intensive agricultural production. So I think I would stop there and say from a Zimbabwe Investment Authority perspective, we would welcome discussions with foreign investors and would encourage them to seriously not forget that best kept secret known as Zimbabwe. We may be the last nation alphabetically, when we stack them up alphabetically, but we shall be the first in terms of attracting investment and enhanced productivity on the continent. Thank you.